What's up, everyone? Nick here with TradeSpace.io. We're going to look at a quick market analysis for the ES in the upcoming week. And I think that this next week will be a really interesting week, and I think that it can really define exactly where the market is heading, because it's kind of at a place where it could go either direction here. So let's stop for a second. Let's get right into it and let's talk about it some. So first off, we've been in a big, strong bull trend ever since November. It's back here somewhere. Ever since November, right? And we started off with this big spike, and we had this tight channel. And the channel kind of got a little bit tighter as we went on and kind of condensed just a little bit where we had our first bear breakout. Now I want to note something real fast here. I want you to look at, we have a range here, but then we have a breakout of this range. And we have 1, 2, 3, 4, 5 strong bull bars right after that. And then something similar here. We have a pullback, gap down, pullback. Then we have a continued big push up. Every single time we make a new high, we go pretty far up. We're also constantly rejecting the 20 EMA over and over and over again. So we have a lot of support. But we get to a spot, like in here, where we begin to see a little bit of weakness. Because whenever we look at trends, we want to ask ourselves, is the other side making money? So if it's a bull trend, we should ask, are the bears making money? It's basically impossible for them to make money before this, but they are kind of at an interesting point where a smart bear could at least lower his risk and eventually make some money. And so just think, if you were a bear and you sold here, you sold below this bar, and then you market pushed up, we had this climactic bull bar, this breakout that didn't go very far, and you're a bear, you see the signal bar, you sell below it again, you can get out break even. Same thing here, if you sold here again, you can get out break even. If you sold here again, you can actually have a small profit. So first time where a bear could have a small profit by scaling in. This very next time, if you're a bear and you sold here, didn't go very far, market started to go against you, you sold again here, you made a fair bit of money. And this is the first time that the bears have made money. So this tells us that we are in the later stages of our trend. So it's important to know exactly where we are, because we're not in a position where we see a breakout and we just expect this breakout to continue to go higher. It's more likely that every time we do have a breakout, or even a strong bull move like this, it's more likely that we're going to have a deeper pullback first. So we had a deep pullback here. We even had a tight channel for the bears, but we're not in a bear trend. This isn't a true bear breakout, because this bearish action does not undo months worth of bullish action. So we come back to it and we look for the bears. We have a low 1, low 2, second entry failure, and it resulted in a tight bull channel and a nice push up testing the all-time highs. We did get a little bit above here, and now we're starting to stall. Last week we were starting to see a final flag form up here. Even though the downside for the bears was still likely limited because of this tight bull channel up, there was likely going to be bulls looking to scale in. And that's really what happened. Bear day, bulls bought it up. Gap down, bear day. We even had a bear bar closing below the moving average, and it resulted in another push up to the all-time highs and a little bit above. So that's some kind of quick context. So let's look at some future history real fast. Future history. Let's look at some future possibilities real fast. So we do have something to keep in mind. So we do have FOMC this up and coming week. A lot of times when this happens, the market will begin to stall until after the FOMC meeting. So when we look at this here, we see we had a final flag forming here, which was essentially a trading range, a very, very tight trading range, had some small breakouts to it. And it's likely that we're going to continue in this tight range until FOMC happens. Now, after the meeting, we because we're in a somewhat of a neutral place in the market, we want to be more reactionary to what happens in the market, and we need to have a few different possible circumstances kind of in our head to react upon. So the first thing is maybe we have maybe the FOMC reaction is bearish. Bears need at least several bars closing below this moving average here in order for traders to be convinced that the market is beginning to be short again. So we're looking for the bears need a big bear day. They already have a good signal bar. It's definitely a major trend reversal setup, right? It's a higher high. We have a signal bar for the bears here. The very next bar really isn't a bad bar either. And if you're a bear and you haven't entered here, you're starting to feel a little bit better about entering. Maybe you want to wait for a second signal or after FOMC. But there's certainly a bearish setup here. The bulls really kind of need some good news because a bull who sees this is not going to want to buy all new highs up here. If anything, they're going to be more likely to wait for a deeper pullback, such as in here, because we're at that stage now. So bears, ultimately, they want several closes below this moving average. We do have a channel line here, and that could end up being a broad channel line. Now this could get broken here, and if we zoom out, this could end up being a big range. This is something that I've been saying since about in here, is that we can very well still be in a range, and it's something that you should consider at least possibly happening, especially if this report is especially bad for the economy. But if we did have a range, this would be the high, and this would probably be the low. We could have a smaller range where the low is kind of in here, and we just break the channel line a little bit. We'll just kind of have to see what the FOMC reaction is. Now, the bulls, they really need a good report here because they don't have a lot of reason to be buying right now. Bulls who bought down here look to take profits in here. They saw this flag. If they didn't take profits in here, took profits down here, or they bought just a little bit more just to get it back up. But they don't have a lot of reason to buy right now. Bulls need several strong bull bars closing around their highs at a new all-time high. So they need bars like this one, like this one, like this one, like this one. They need bull bars like that. They need it to close above this level now. So will they get it? We'll really just have to see. But next week, you should anticipate a really, really tight trading range until the FOMC report comes out. So if you're if you're swing trading this, or the S&P, or any sort of micro or ETF, then it's probably best to go ahead and sit and wait until after FOMC report. And then after FOMC report, if we get a big bearish reaction, then it's probably a relatively smart idea to go ahead and look to sell here. We could have a big bear bar, and you could sell below that big bear bar. Be willing to scale in if the market goes against you just a little bit. And especially if we get a bear close under the moving average. And if we get two bear closes under the moving average, I would say then that's plenty enough signs to go ahead and look to sell. If you are a bull, we want to see a bullish reaction. But remember, we need to have closes above these all-time highs And even if we get them, even if we get a big strong bull bar close, it's still probably going to be a relatively short leg. It's probably not going to be something like this where it's really big and lasts a long time. Even this is kind of it's short compared to what happened over here, but this leg up could be, you know, even shorter than what happened from, let's just say, here to this high here. So the upside is relatively limited for bulls. The downside for bears, they are looking at a pretty good setup, but they need an FOMC report. The key thing is to remember is to wait for a strong reaction first. We want to see bears under the moving average, bulls in the all-time highs with strong closes. In the meantime, I personally would just wait and let the market play itself out. So that's pretty much what I have, guys. If you're interested in this, then I do post this for free on my mentorship Discord. Anyone who works with me one-on-one lessons, they do get free access to this Discord for life, where I post analysis like this each week. So contact me if you're interested in that, and I hope everyone has a great week trading. Best of luck to everyone.